Welcome back to Ox Talks. Thanks for watching the show today, and thanks for supporting the channel. I'll jump right into the topic I want to discuss with you today is the state of the U.S. housing market. From time to time, I will come out and share an article with you that I see that I believe fairly and let's say, well, more fully, not fairly, fully covers the state of the housing market in this country. And the article I'm going to share with you today is a current article from today from Newsweek. So I want to address it. Please feel free to leave your comments below, and anything that you want to comment on, please do so. Real briefly before I start the article, the markets are kind of rolling. Stock market's trying to recover from yesterday's Nasdaq loss. Gold's up $20 now. It's trying to recover some of what it gave back yesterday. Cryptos are trying to recover a bit, and I think they are. So we have a lot going on in the markets. The markets are really on pins and needles day to day. We had that AI thing come out yesterday through China that rattled everything, and Nvidia fell. So it's all day to day things are happening that affect the institutions and the markets. And so we talked about this a couple weeks ago. Be ready for a bumpy ride. Okay, and we're seeing it unfold in real time. Stuff coming out of the Trump administration every day. New executive orders, issues, happening down at the border. Government cuts, all this kind of stuff. But the housing market's very important because I'd still believe that real estate, whether it be residential real estate, investment real estate, commercial or residential for rental, can be a fantastic way to grow your net worth. And also, obviously, my personal belief is owning a home for you and your family is much better than being a lifetime renter. And some of you may disagree with that. Okay, but that's my personal perspective. But it's like anything else. If you jump into a market at the right time, everything works in cycles. Okay, and with real estate, you always hear the old adage, location, location, location. I would say timing, right? If you get into a market at the right time, and you buy right, you have big potential upside. And normally that plays out as the next cycle rise in the market. If you get in at the wrong time, you're in the hurt locker for sometimes, years. So for those of you that jumped into the housing market, let's say last year or in 2023, you were paying inflated prices. You were paying a mortgage of probably 7, or maybe some of you 8 or over 8% for a 30-year fixed mortgage. Some of you might have taken on the more risky, adjustable rate mortgages. Hopefully you did not. But look, if you did, if you didn't wait, you were impatient to get in because your stockbroker or your realtor or your CPA was telling you now's the time to go buy real estate. Don't miss the bus. You're going to have to ride this thing out. Okay, and I'm not an expert. Just going to read the story to you today, and you guys can make your own determination. But I think the housing market, we're seeing it coming down pretty good now, and it's going to get a lot uglier before it gets better. But there will be opportunity for those that have been patient, kept some dry powder, worked on their credit score, have a good income coming in, a stable income, and that will be able to take advantage of opportunity. When this thing starts to really crash, and when these sellers are truly forced to come to their knees and make deals. Right now, that's not happening. Okay, but it will. And for those of the sellers that don't do that, they're going to lose their house in bankruptcy probably. And the ones that own their house free and clear, they can sit back and take as much of a haircut, I guess, as they want to. The article from Newsweek today, U.S. housing market underperforming as third of homes take price cut. It says 1 in 3 homes listed for sale on the U.S. housing market has taken a price cut from the original listing, according to founder and president of real estate and analytics firm Altos Research, Mike Simonson. We're noticing in the data some signals say home prices nationally could turn negative this spring, showing year-over-year home price declines for the first time since January 2023. He says the U.S. is facing an ongoing housing affordability crisis spurred by a historic shortage of homes, rising prices, high mortgage rates, and years of pent-up demand. A widespread lack of inventory has kept prices up, even as the Federal Reserve's aggressive rate hike campaign sent mortgage rates skyrocketing after March 2022, and the number of homes dwindled. He says, as mortgage rates are still hovering around the 7% mark, despite recent Fed rate cuts, aspiring home buyers remain cautious before making a purchase. I hope they do. I hope most have. He says data shows that sellers are being forced to meet them where they are, especially as inventory is expected to increase in many parts of the country. All right, increased inventory. That's mean more competition. Sellers are going to have to get realistic. Widespread price cuts in January are among the signals suggesting that home prices could slide down across the country this year, according to Simonson. We use the percentage of homes on the market with price reductions as a leading indicator for future sales, he said. Right now, 33% of the active listings have taken a price cut from the original listing price. Last year, this time, it was 31%. So more sellers are now facing an absence of buyers that they feel it necessary to reduce their asking price. In January, but again, if you're over leveraged, if you've mortgaged to the hilt, or if you have a mortgage, you went out and got a big home equity line of credit to go buy a toy hauler at ATVs or take vacations or whatever, you can only cut your price so much. So everyone's situation is different, but the sellers that are just laden with debt on these properties, they can't cut their price below what they need to net to cover the mortgage balances, the loan balances, the taxes, and all their closing costs, right? So they can only go so far. The next step from there is they give the keys back to the bank, all right, or it gets foreclosed. In January 2023, when the housing market was facing a short-lived price correction that ended by springtime, the percentage of homes on the market with price reductions was 33.9%, it says. The weakest pricing moment of the past 3 years was in the fourth quarter of 2022. He says by 2023, price cuts were still elevated, but at the moment, they were not surprised by how quickly the market was recovering. He said that is not likely to happen this year. You're not going to see price recovery. You're going to see price reductions, okay, across the board. He says the homes that are on the market now with no offer should hopefully, hope's a bad strategy, right, folks? Hopefully receive one in February and sell by March. Not all of the home price measures are negative, he said, that according to Altos data, the median price of the newly pending sales is currently $384,700. That's up 2% from this time last year. He says again, but the risk is to the downside. There's no upward price momentum in the data, he added. Other signs that the market might become more affordable in the coming months, besides widespread price cuts, include an increase in the number of new listings unsold. There were 51,000 new listings this week, according to Simonson. That's up 4% from last year. And the number of new listings unsold was up 13% from this time in 2024. So substantial spikes. As inventory is growing, so is the number of unsold homes sitting idle on the market. There are 637,000 single-family homes unsold on the market right now per Altos data. Most years' inventory bottoms in February and climbs for the spring, he said. This year we may have already passed the bottom. Demand is obviously weaker with 7% mortgage rates. The median price, it says, for a single-family home currently is $421,000. That's a little bit lower than January of 2024. The data is telling that home sellers and listing agents know exactly what the demand is for homes, and they understand the affordability crunch that buyers face. Therefore, they're pricing listings a little lower than this time last year. Again, it says a little lower, but they have a huge spike in inventory. You've got time on market is also exploding. So guys, just follow this. If you're in the market eventually, if you've kept some dry powder, if you've worked on your credit score, if you have a good, reliable, stable income to show to a lender, and you've done all the right things to position yourself, just, again, not financial advice, legal advice, but just, sit back and watch this thing unfold. Don't be in a rush to jump in, okay? Obviously, there are deals. If you find a motivated seller, every situation, every deal is different. I'm seeing out here in my local area, we have festivals out here, Coachella Festival, the Stagecoach Festival. We have the B&P tennis tournament out here every year in February. And these houses, they rent up. A lot of people buy properties out here so they can list them and rent them for festival seasons and for the sporting events. And they collect huge amounts of money. Even that's down. I have clients of mine that own these homes, and they're not seeing the kind of traffic they have in years past, and they're also not bringing the same dollars they once did. All right, so hope you guys found this interesting, helpful today. Again, if you didn't make a rash decision in the last 2 years, if you did, okay, you're stuck. Hopefully you got a great place, you're happy, suck it up, pay your mortgage, enjoy it, and just wait it out. But if you were patient, keep your dry powder, keep your credit score strong, and keep that good job there on the books. And I think you'll find yourself sitting with good opportunities here maybe in the next year or so. All right. Went a little bit long today. Again, thanks for watching and supporting the channel. Talk to y'all soon. Bye.